So, um, what I think is happening in the space is we've probably got 3 to 5 years to pick up as many big parking, big mobile home parks as we can because private equity is flooding very, very quickly to the space. A lot of people are heading to the space. The stable and predictable income really attracts capital. And when you get the outsized tax benefits that come along with mobile home park, uh, the sophisticated larger check writers are really flocking to the space.
Okay. What's the last deal you bought and what did you like about it?
So the deal we bought in June of last year was about $11 million project. Probably the thing we liked most about it is it cash flowed from day one. We paid 4.5% annualized cash on cash for our very first full month or full quarter of operations. And I think our cost segregation study came in at about 155% passive losses year one with the new accelerated depreciation under the new administration.
Welcome to the Build It to Billions podcast, where we guide successful entrepreneurs and investors on their journey from millions to billions. We believe that the key to scaling and compounding your wealth and life starts every single day with the mindset and practice of stewardship over ownership and applying billionaire biblical principles. Our ultimate goal is to help you scale and compound your wealth and life so you can give more or all of it away to help MVPs. My name is Brett Swartz, and each episode we're joined by the world's top entrepreneurs, millionaires, or billionaires, and they share their secrets, insights, and wisdom with us so we can all level up and make a bigger impact. I'm excited about our next guest. He's out of Arizona. And with over 25 years of experience in sales and leadership, investor relations, and capital raising, he brings a unique blend of corporate excellence and entrepreneur insight to the investor experience. In his current role as investor relations manager at 5210, he's focused on raising capital, expanding their investor base, and scaling proven real estate investment strategies, and so much more. Please welcome to the show, Mr. Randy Smith. Randy, how are you doing?
Doing really well, Brett. Thanks so much for having me on the show.
Excellent. We're going to be talking about some mobile home park and investing and kind of the marketplace, what's going on and what you're seeing out there with 5210. So, but before we do all of that, would you give us just a little bit more about your story and your current focus?
Yeah, you kind of shared the high level overview, but as you mentioned, I spent about 25 years in corporate America. I was a high income W-2 sales guy, and I had a terrible tax problem. So I started investing in real estate like so many folks do. And through my active investing, I figured out pretty quickly that I did not want to be an active investor while I was in my W-2. It was better for me to spend my time doing what I did best in my superpower of sales, and decided to start passively investing in other people's deals. So did a bunch of projects where I became an LP investor in other people's deals. And then I got laid off from corporate America and found out real quickly that all of those passive deals I was doing where I didn't want to have high cash flow because of tax reasons. I figured out real quickly when you lose the W-2 job, you need cash flow. So um, talked with my network, figured out my superpower after corporate America, and I landed in the fund to fund space where I started bringing capital from my network and from my pocket to other people's deals.
Awesome.
So did that for a few deals before joining 5210.
Fantastic. And let's kind of dive into what you guys do at 5210 and mobile home park. You know, what's the state of the industry and where do you see it going in 2026?
Yeah, so 5210, we are a mid-sized mobile home park operator. We've got about 1,800 lots, currently own 12 parks across 5 different states. And what's unique about us is that we're a group that our entire portfolio is performing at or above targets. So if you're an LP in deals out there and you've spread your capital across a bunch of different operators and deals, you've probably found that most groups have a couple of dogs and have some deals that aren't going so well. And that's really what attracted me to this group. So they're a group that has never missed a distribution, never delivered a K1 late, and just all around good guys. So excited to
Cool.
be on there and
What's the
sharing their
secret to
opportunities.
them performing at such a high level when a lot of others are struggling?
Yeah, so everybody claims to be conservative underwriters, but I would say that these are the most conservative underwriters that I've seen. So much so that I think they underwrote 130 some odd deals last year and only bought one. So they're very, very selective with the assets that they buy, and those that they do, they're really just kind of singles and doubles and pro forma is very, very conservatively underwritten.
Cool.
So
Awesome.
yeah.
That's good. Well, good for them. And it's not easy to do. So that's good for them. By the way, people want to learn more about the company. It's 5210.com, 5210.com. And it's actually the number 52 and then spelled out 10ten.com. Okay, excellent. All right, what are you seeing in the mobile home park industry right now? Are you seeing distress and opportunities? What's kind of your take on just being able to be a buyer right now in today's market?
Yeah, so there is always like a bid ask variance between the two. Like we are not having a lot of success buying new parks right now, and that's because people aren't willing. Well, the people that are willing to sell the parks want to sell them too expensive, and we end up coming in like second, third, fifth when it doesn't because we're not willing to pay what other people are willing to pay. So um, what I think is happening in the space is we've probably got 3 to 5 years to pick up as many big parking, big mobile home parks as we can because private equity is flooding very, very quickly to the space. A lot of people are heading to the space. The stable and predictable income really attracts capital. And when you get the outsized tax benefits that come along with mobile home park, uh, the sophisticated larger check writers are really flocking to the space.
Okay.
So
What's the last deal you bought and what did you like about it?
So the deal we bought in June of last year was about $11 million project. Probably the thing we liked most about it is it cash flowed from day one. We paid 4.5% annualized cash on cash for our very first full month or full quarter of operations. And I think our cost segregation study came in at about 155% passive losses year one with the new accelerated depreciation under the new administration. Investors are really excited to see those type of passive losses come through on their K1.
Okay. And what's the average cash on cash on that deal?
So it starts out 4 to 5. It will actually ramp up to 8 to 10% over the course of our whole period. But we do actually generally do a cash out refinance somewhere between year 3 and 5. So that could bring cash flow down, but everybody had their money out of the deal. So essentially it's de-risked at that point and infinite returns for our investors.
That's cool. So, and that's kind of the model. So 4 to 5 to start, and then 3 to 5 years cash out refi, and get your money out, and then just hold, and you get that long term tax benefit. If someone had put $1 million in with bonus depreciation, now back at 100%, is that accelerating it last year, or is it you have to stay on the old schedule?
Nope. If we bought it in 25, it was accelerated.
Good, yeah, but
I think it was
at
after like
100%
middle
or
of January. Yeah, it's 100%.
okay, good. That's
Yep.
good. Okay, so gosh, 4 to 5%. Do you get pushback when people say, Randy, that's not that great? You know, I know I get some tax benefits, but like $1 million, 4 to 5%, it's not moving the needle enough. Or what is your biggest objection for people investing in mobile home parks right now? Or do you not have that? Do you have so many people knocking on the door?
Yeah, so it's interesting. I came from the multifamily space. I spent a number of years over there, and I was absolutely shocked how eager people are to write checks in the mobile home space, um, because most of the multifamily deals were not cash flowing year one. Certainly, self storage got crushed in the last couple of years. Office, we know what's going on there. Some of this build to rent stuff, it takes so long to lease these things up. So 4 to 5% year one, when you see year two in the 5 to 6 or year three and 5 to 6, it's pretty competitive with what's out there. Um, you're certainly not going to get core plus quality assets with 4 to 5% year one, in my experience. Uh, but again, I was a multifamily guy, value add. A lot of times those were negative cash flow the first couple of years. I personally got burned on a bunch of those because I was chasing big IRRs. And as I've become a little more skilled and experienced and educated, I would just give me something cash flowing day one and then some steady growth from there on out. That's what I'm going to look for. And that's what I'm finding sophisticated capital is looking for.
Yeah, that's good. I think I love mobile home parks, and yeah, it tends to have more stable cash on cash and higher cash on cash. Yeah, multifamily's been hit pretty hard, so good to diversify, right? But all right. what's the biggest challenge? Someone shows up to you and they're like, Randy, I want to invest. I'm selling this business, this real estate, multiple millions of dollars, and I want to go into your fund, right? And I have all this tax.
Yeah.
Can I get in? What's your answer right now?
So number one issue is deal flow. I don't have enough deals today. Two, I would say I'll throw you kind of a lob here. We get a lot of 1031 capital that comes our way.
Yeah.
And prior to the conversation you and I had just a few moments ago,
Yeah.
I don't have a solution for them because we don't do tick
Right.
structures. So yes, I will be excited to learn more and more about what it is you guys do with your
Okay,
organization.
so I want everyone to listen here, right? Because you might be saying, "Hey, I love what 5210 is talking about with mobile home parks, and I have a sale, or I'd like to sell, but by the way, funds don't allow 1031. Okay, so that doesn't work, right? So, and then what he's referring to is like a tick where you can sometimes sell, and then might be able to do it into a syndication, but that's like very hard to do typically. We eliminate all of that headache, and we use a trust with an installment sale method that allows you to sell to a trust, get a promissory note, and this trust can then invest anytime into any fund or any investment, all tax deferred. It's pretty cool. It's kind of like an IRA, like a big IRA, and you can also partner with it and go into your own deals if you want, kind of like a self-directed IRA. It's known as a deferred sales trust, not to be confused with the Delaware statutory trust, which is another form of a 1031 exchange. If you want to learn more, go to capitalgainstaxsolutions.com. It's capitalgainstaxsolutions.com. So you said deal flow is tough right now. Yeah, interest rates are still hovering, not at great levels, and cap
Mhm.
rates and sellers are also hovering, saying, well, I don't really need to sell because either I don't want a 1031 and I don't want to take on new debt. I'm happy where I'm at. I also think our strategy is a great way to unlock those deals, right? For those sellers that are reluctant to sell because they don't want to trade their 300 spaces for 400 spaces. They have their millions. They don't need any more millions. They just need to be able to
Yep.
retire and diversify and still be tax deferred without having to give up all control, all liquidity, all diversification. So do you see how this could also be a way to unlock deal flow because of the tax challenges that these sellers are facing?
Yeah, I would say that we're primarily buying from mom and pop operators,
Mm-hmm.
and exactly they're aging out. Their kids don't want the park, they don't want the tax burden. So we're having to get creative with some type of seller carry or lease back or various different strategies that kind of protect them from the tax issues that they have. So absolutely, this sounds like it could be a good solution for that as well.
Yeah. So just mentioning that too, as people are talking, because if you're a operator or you're raising capital, or you're trying to unlock deals, you've got to. Yeah, I like to say, Randy, we don't get paid for helping people invest and make money. We don't get paid for deferring capital gains taxes, and we get paid for solving people's problems, right? And part of the problem is I don't have enough passive income to live off of, right? So I'm so active, or my cash on cash return is not diversified into mobile home parks. It's just focused on this single family or this one business, right? And so how do we solve people's problems? Same thing with the seller. That's the key. That's where if you can do that and you can compound it with multiple things, it starts to become an unresistible offer for people. So, okay. So 5210, mobile home parks, hard to find deals, challenging. What other things about the marketplace do you think is interesting with the bonus depreciation coming back? Anything else that's kind of like, hey, this is do you feel like the market's down? Do you feel like prices are this is the lowest year this year, or what's your sense for just timing on this, or is it just blocking and tackling, just keep finding a deal 1 in 100, right, and then you move on it?
Mhm.
Is there any sense for that, for like timing of where we're at in the marketplace?
Yeah, as I mentioned before, I think we've got a fairly short window to really pick up as many of these properties as we possibly can
Mm-hmm.
because private equity is flooding to the space.
Mm-hmm.
Um, what we've done over the last couple of years, we've spent quite a bit of time retooling our staff, getting prepared for a heavy acquisitions year. So, Jack, who is one of the founders of 5210, they brought me on about 5 months ago, essentially to backfill the investor relations. That actually has freed Jack up to spend more time in acquisitions, and we're hiring more staff in acquisitions to create our own proprietary acquisitions channel versus just working with brokers. So our emphasis this year moving forward is really, really double down on the acquisitions piece. We've got operations figured out. We've got investor relations figured out. Now we just need to get as many at bats as we possibly can to take down our targeted 4 to 6 parks this year.
Cool.
So, yeah, so we feel pretty equipped for what we're facing this year,
Good.
and excited, yeah, about learning new things like this and finding new investors to partner with.
Cool. That's awesome. You know, what do you find is like the ideal avatar for the LPs that you're working with? Like what's the average check size and where are they coming from? Like, and how are you finding them?
Yeah. So average check size is about 300,000, which is different. I came from very small 25, 50, $100,000 investments with my private equity firm. And I think it's like any organization, as you become more seasoned, uh, there's going to be a flow of capital that comes to you as you get track record. Um, I think 5210 is right in that area, that kind of that sweet spot where we don't have to beg for capital today. We've got more people wanting to place capital with us than we can actually deploy. But I think if we do get to the point where we're doing the level of acquisitions that we're going to need to get more creative and start looking for other options like this. So um, like we're in that easy spot right now for capital, but I suspect that'll change.
Awesome. Randy, we're running out of time. Are you ready for lightning round?
Absolutely.
Knowing what you know now, if you go back to your 20-year-old self and you're at corporate America, what would you tell your 20-year-old self what to do? What's the one golden nugget you tell yourself to do?
Yeah, gosh, good question. So stop chasing titles and start investing more sooner. Yep.
I like that. Stop chasing tiles and start chasing truly passive income. That's how maybe I would say it. Question number 2, what's the number one book you've recommended or gifted the most in the past year?
Who Not How is the number one book I've probably suggested for the last 2 or 3 years.
Awesome. What's the number one secret of that book?
So if you are making 300 or 400 grand a year, figure out what your hourly wage is, and if there is something that you can hire somebody to do versus doing it yourself, you are costing yourself money if you do it yourself.
Perfect. So. Opportunity cost. I love it.
Yep.
Question number 3. What are you most curious about right now?
Most curious about? I like to look at trends and what's going on in the real estate space. I'm really intrigued personally in the co-living space right now. So I am digging into that personally. I think we've got this affordable housing issue, which ties nicely to multifamily and mobile home, also ties to this co-living space as well. I think we're going to continue to have bigger and bigger issues in that space. So when you start seeing ADU solutions, co-living, all of those types of things, I'm just fascinated with it.
Excellent. Next question. Number one leadership quote or theme that you strive to live by?
Leadership quote. Wow, good one.
It could be a theme. It could be a theme too.
Yeah, so I got some advice actually early in my career when I was chasing titles. And a boss that I worked for in the computer industry, I had gotten 2 or 3 promotions, and he said, Randy, there's one thing to get a promotion, but there's another thing to be the absolute best at what you do. And if you're the absolute best, the titles don't matter anymore. The money's going to come, the happiness is going to come. So just focus on perfecting your skill.
I love it. Be the best. Last question, and we'll wrap up the show after helping the people that you've helped either move from the corporate world to the more passive income world and build wealth. How do you best stay centered in your values, Randy, and stay encouraged to charge forward to reach even higher heights?
Yeah, so I think you need to align with people or partner with people, do business with people that have similar values as you do. People with I think that values actually rub off. So, the classic saying, like you're the sum of the 5 people you hang around with, I think really does apply. And if you're hanging out with the wrong folks or people with different values, then their values become yours and water down your values. So find people that have similar values and stick with them.
Awesome. Randy Smith, it's been more than a pleasure having you on the show. Thank you for sharing your wisdom and insights on the mobile home park market. For our listeners who want to get in touch with you or the company that you work with, what's the best place for them to find you?
Yeah, easiest way is at 52ten.com, or you can find me on LinkedIn, Randy Smith.
Awesome. Thanks, Randy. Also want to thank all of our listeners and viewers for being a part of the Build It to Billions podcast, also streaming on Capital Gains Tax Solutions podcast and YouTube channels. We're on this journey with you to scale from millions to billions to give more all of the way to help MVPs. And we want to encourage you to take action today. Consider mobile home park investing, perhaps with 5210. As well, if you have a massive exit of $1 million or greater in businesses, Bitcoin, or real estate or stock, go to Capital Gains Tax Solutions.com to build a capital gains tax exit plan. Get started today. It can be too late when you exit. You can eliminate the need for the 1031 exchange forever. You can invest into groups like Randy Smith's group, which is awesome. And but you need to check it out. And you can check it out by getting the book, Building a Capital Gains Tax Exit Plan, on Amazon. We have Kevin Harrington from Shark Tank in the book, which is pretty cool. And then you can also just go to capitalgainstaxsolutions.com. Appreciate everyone listening and watching out there. We'll talk to you again soon. Bye now.